Brought to you by runtogold.com, the premier source for monetary science applied to geopolitical, international, and economic, financial news and events. Welcome back to the runtogold.com podcast. This is episode 19. We will be discussing these words of Paul Volcker.
And private responses to this current mother of all crises.
The role of gold in the international monetary and financial system is extremely important because gold is nobody's liability. It is not subject to counterparty risk and cannot be manipulated, at least in its physical presence, by central banks. These words of Paul Volcker were spoken at the Economic Club of New York on April 8, 2008.
Bank-centered, highly regulated financial system to an enormously more complicated and highly engineered system. Today, as you know, much of the financial intermediation takes place in markets beyond effective official oversight and supervision. And it's all enveloped in unknown trillions and trillions of derivative instruments. It's been a highly profitable business. Finance has accounted recently for 35 to 40% of all corporate profits, way above normal relationships. And I have to say, it's very hard to argue that the new system has brought exceptional benefits to the economy generally. Economic growth and productivity in the last 25 years has been roughly comparable to that of the 1950s and 1960s. But there is a difference. In the earlier years, the prosperity was much more widely shared. This year, complexity, opaqueness, and systemic risks embedded in the new markets, complexities and risks little understood, even by most of those with management responsibilities, has enormously complicated both official and private responses to this current mother of all crises. Even previously normal trading relationships among long-established institutions are questioned. What has plainly been at risk is a disorderly unraveling of the mutual trust among respected market participants upon which any strong and efficient financial system must rest. Simply stated, the bright new financial system, for all its talented participants, for all its rich rewards, has failed the test of the marketplace. To meet the challenge, the Federal Reserve has judged it necessary to take actions that extend to the very edge of its lawful and implied powers, transcending in the process certain long-embedded central banking principles and practices.
There you have it, straight from the horse's mouth. This is currently the mother of all crises. That is because there are hundreds of trillions of dollars in derivatives. These derivatives, while the notional amount is so high, it is important to keep in mind that when the counterparty fails, the notional amount becomes the real amount. An example would be fire insurance on your house. The probability that the house will burn down is what the value of the derivative is considered at. But what happens when the house actually does burn down? Instead of $1,000 value, which would be the probability of the house burning down, times the potential payout, you have the full notional amount of the insurance required, which may be $200,000. So likewise, the derivatives function in this manner, with credit default swaps and other types of instruments that have been created and issued. These financial weapons of mass destruction, to use the words of Warren Buffett, have infected the balance sheets of nearly all major publicly traded corporations, as such behemoths as GE have used them to smooth earnings over the last 30 years. Truly, we don't know what is on the books, how much they're worth, how much potential liability there is, and this has led to this breakdown in trust. For these reasons, gold is a primary beneficiary because it is the safest and the most liquid asset. It is not subject to counterparty risk. It is not subject to the central bank machinations by increasing the adjusted monetary base 100% in 2 months. It is the only currency that at all times and in all circumstances remains money. Many of these derivatives have been used by the central banks and their agents, the bullion banks, to suppress the price of gold to ensure the dollar as a strong world reserve currency. This has led to the current derivative illusion that is evaporating. While it may seem counterintuitive that for someone who owns a lot of something would engage in a cartel to keep the price down, it makes complete sense with the central banks. Their power to issue what we use as currency is infinitely more valuable than the price of a portfolio asset. Thus, they cannot be expected to act as other rational economic entities who do not possess the ability to issue fiat legal tender currency illusions. The 19th episode of the RunToGold.com podcast. Thank you for listening. You've been listening to the RunToGold.com podcast, the premier source for applied monetary science on the web.